What's up, guys? Welcome back to another episode of Money Warrior Network, where we talk about everything real estate investing and ways to build wealth for your financial life. Today, I want to talk to you about the difference between a home equity line of credit versus a home equity loan. There are variable differences between the two, and I want to make sure that you understand those differences before you choose which one is best for you. If you want more content on home ownership, on home equity line of credits, home equity loans, and real estate investing, please subscribe to the channel and click the like button so you don't miss out on more future content. So first, I'm going to start with the home equity loan, and I'm going to tell you the various differences between that and the home equity line. So with the home equity line of credit, it's an open-end loan. And basically what that means is it's very similar to a credit card. You can use it in a revolving basis, and you can utilize it for home repairs, real estate investing, paying off debt that you may have higher interest rates on. These are different ways that you can actually use that home equity line of credit. And what that is it's basically taking the open equity in your home and leveraging it in a line of credit. So for instance, let's do some math. Let's say your home is worth $200,000 and you only owe $100,000 on the home. Then that means you have about 50% of equity available to take out of that home. Now, most banks are only going to allow you to take about 80 to 90% of the equity at the most. So out of that 100,000 in equity that you have, you can potentially take 80 to 90,000 of that and utilize it for something else. Now, as you guys know on this channel, we're all about building financial wealth. So the home equity line of credit is a great option if you want to invest in real estate or other areas that can possibly grow your wealth. So, the best use for home equity line of credit, I would say, a lot of times is for short-term purchases. If you are doing real estate, you never want to use the home equity line of credit for any long-term purchases when it comes to real estate, just because you're not really going to get the return that you're looking for based on the interest rate and the high payment that an home equity line of credit may have. Also, with the home equity line of credit, you are going to see higher interest rates. What I mean by that is versus a regular home loan to buy a home equity line of credit could usually have an interest rate right now anywhere from about 8 to 11%. Reason being is the prime rate, as you guys all know, is very high right now. So it's increasing the price of these home equity line of credits. Let's talk a little bit about the home equity loan, and then I'm going to tell you some of the differences between the two. So, unlike the home equity line of credit, the home equity loan is a closed-end loan. Basically, what that means is you get a certain amount and you have a term to pay it. So let's take that same scenario. Your house is valued at $200,000. You only owe $100,000 on it. You have 50% of equity in that home. Then let's say you want to take $100,000 out of open equity. Then on that loan, you would have to pay that in a certain term. Most home equity loans go anywhere from about 12 to 60 months, meaning that let's say you took a 60-month term, you have to pay that loan off in 60 months. The great thing about that is that it gives you the ability to structure any debt that you may want to pay off, and it makes it a lot easier to see when that debt's going to be paid off. Versus the home equity line of credit, you can pay off debt, but that money, that line of credit money replenishes so that you can use again. Guys, that can get people in a lot of trouble if you're not structured and you don't know how to properly handle debt. So my advice is, if you're going to get the home equity loan, make sure that you're using it for a sole purpose. Don't get a home equity loan if you're not going to use all the money at one time. You don't want to have that much money sitting that you're paying on monthly and you're not actually utilizing. Because then at that point, you're just wasting money on paying interest fees. Also, home equity loans tend to have a better rate than a home equity line of credit. So this is something that's great for restructuring debt. If you have a lot of credit cards and you want to pay them off, this is a great way to be able to do so. I definitely recommend the home equity line of credit or home equity loan, depending on what you're doing. It's a great way to be able to build wealth if you structure it correctly. Now, I'm just being honest, guys. I've seen a lot of people get these home equity loans, home equity line of credits, and they do things like put pools in their backyard or buy brand new cars, thus creating more debt. As you guys know, I'm not a big fan of debt. I'm a wealth building fan. Guys, if you really want to build wealth, a home equity line of credit or home equity loan is a great way to give you the capital needed to be able to make life altering changes for the better. But you have to know how to do it. I'm going to also be posting another video to show you how you can leverage a home equity line of credit to be able to invest in real estate and how that's going to help you grow wealth over time. Also below, check out the link to the video that another real estate investor posted that shows you the differences between home equity line of credit and home equity loans as well, that I think you'll find some valuable content out of. Guys, as always, plan your excellence today so that you can have success tomorrow. Peace.